Thanks everyone for joining us, and welcome to our breakout session on exploring the evolution of payments and business models. My name's Cody. With me is Edwin and Paul from KPMG's Management Consulting Financial Services team. Just a few quick housekeeping items before we start. There is functionality to ask the speaker or ask us questions, and you're able to upvote your favorites. There's join the conversation to text chat with your fellow attendees. And during the session, your mic and video will be disabled. I think it's probably appropriate to do some quick introductions before going too deep into content. So maybe starting with myself. I'm a senior manager in KPMG's payments practice with a focus on strategy, operations, and risk. This has included engagements on payments modernization, such as readiness for real-time payments, links, ISO 20022, cashless and contactless strategies, including cash management, principle-based regulatory frameworks, payments technology transformation, to name a few. I think what I really enjoy about the way that our practice is organized is the treatment of payments as a horizontal capability. What I mean by that is that our work includes, but is not exclusive to, financial services organizations. We also have the pleasure of working with transit agencies, municipalities, provincial and federal governments, retailers, technology companies, in addition to banks and credit unions and PSPs, operators, central banks, and other organizations. So as we go through the content today, I'll look to add color and contrast on how some of these different industries are approaching payments and integrating payments capabilities into their business models. I'll pass it to Edwin to do an introduction as well.
Thanks, Cody. Yeah, Edwin Isted, great to be here this morning with all of you. And certainly from a background point of view, much like Cody, have the privilege of working in an arena which is morphing very quickly. Have significant experience not only in consulting around payments, but also across industry. So played both sides of the fence, so to speak, across multiple geographies. And much like Cody, certainly value what payments provides as an opportunity to see different industries, different business models in a horizontal view, but also being able to drop into sort of verticals where it's specifically appropriate. I believe the Canadian market at this point in time is a market which is seeing a huge amount of concurrent change around payments and ancillary capabilities as well that are required for them or going to be offered through payments. And it's very exciting to be able to share some of that with you this afternoon or this morning, depending on where you are from a time zone point of view. And I guess we'd love to be able to have a broad payments conversation, not just focusing on a particular topic, be that an ISO topic or something, because those are certainly very relevant, but it's also part of a broader ecosystem. And some of the things we're going to be touching on during the conversation today are ecosystem-centric topics as opposed to very specific topics. So great being here, and I'm going to hand you over to Paul.
Hi, good morning. I'm Paul Jackson. So I've kind of got experience from around various parts of the world, the UK, Europe, Australia, and Canada with various major banks and their payments programs. So I spent the last 20, 25 years working on payments, thing everything from SEPA and Target 2 in the UK to faster payments, then card systems across Europe, NPP for ANZ Bank in Australia, and helping our RBC and some of the Canadian banks set up their things. So a lot of experience on actually understanding the impact of change, not just to financial services organizations, but across the ecosystem more generally. And been very interested to see the way the ecosystem kind of has started to break down a little bit now and provide opportunities for fintechs and others to get into that ecosystem and sharing some of the revenue that surrounds the payments industry. So hand back to Cody, and I think he's going to take us away with the start of the presentation.
Yeah, thanks both. I mean, just again, quickly from an objectives perspective and what we're planning to cover, as mentioned in the description, the topic we will discuss is how payments have evolved from a basic capability in the value chain into one that organizations are leveraging to be highly innovative and differentiated. We'll walk through an example of an illustrative payments value chain and discuss how different institutions and are organizing their enabling payments capabilities to focus on costs or to focus on customers. We'll also discuss how additional payment data, open data, faster payments are paving the way for emerging use cases and competitive corridors, However, we will continue to emphasize that organizations should not lose sight of traditional channels and methods that really continue to dominate the payments ecosystem and volumes and values. As Edwin mentioned, we don't want this to be a one-sided conversation. We're hoping to make it a dialogue with the audience where we can. So please drop any questions you have into the chat, and we'll do our best to pick up on them and answer them as we go. But where we wanted to start the presentation was with a timeline to illustrate some of the major pavement achievements in the last 40 to 50 years. This is by no means an exhaustive list, as we couldn't simply fit all of that onto the slide, but rather it's more meant to illustrate a few thematic changes to payments. First, to highlight the role that they traditionally played within many organizations, which was one that was very transactional by nature. An event would trigger a payment, the payment was made, and then the process resumed. I wouldn't necessarily refer to these as being overly value-adding per se, especially if we're thinking about organizations that sit outside of the sphere of financial services. Payments were a utility and required for commerce as a capability. They weren't given much attention. When they're working well, they're almost forgotten about, right? In a good way. However, when they break down, it can bring the business to a grinding halt. Now, that traditional role of payments was very much constrained by the infrastructure and technologies of the time. Each enhancement that we kind of see on the screen starts to enable capabilities and business models and use cases for payments that weren't possible before. Fundamentally, this is because they continue to become more digital and paperless, faster and contactless, more data-rich and interoperable through ISO 20022 and the global adoption of MX messaging, more open and consumer-directed. We have non-fiat currencies, blockchain, smart contract now. Another lens that we could look at this timeline is from a risk perspective. As we've heard throughout the conference, this would also include things like enhancing regulation via the Retail Payments Activity Act, but also how payments are becoming safer and more secure through things like digital ID. I think our takeaway here is to reflect on the massive amount of transformation that the payments industry has gone through and continues to go through. And we want to talk specifically about some of these industry-wide initiatives that have impacted business models and capabilities and the responses that we're seeing across different industries. I think maybe to highlight some of these perspectives, I may ask Edwin and Paul to weigh in from a global perspective. I guess maybe a more specific question would be, what are your key observations regarding new payments, innovations, and adoption in broader international markets, whether it be open banking or real-time payments or ISO 20022? How are institutions reacting to industry-led initiatives that significantly impact their business model?
Thanks, Cody. I guess speaking to maybe a smattering of those, because there are many of them that make sense and certainly are relevant for the conversation, but let's pick up on one or two of them. If we look at, for example, the adoption of real-time payments, the Canadian market is on that journey right now. There are a number of geographies that have been on that journey for a while longer, and certainly we can speak to some of the characteristics that those markets have experienced. I think it's safe to say that most markets have been quite cautious with regards to real-time payments or real-time clearing, depending on how it's referred to, and typically approach it a little bit cautiously. Being irrevocable in many cases, it typically has quite a large target painted on its back from a misuse and fraudulent point of view. But one of the things which I think we've observed in a couple of markets, whether they've been in the sort of the African context or the European or Australian context, is twofold. Firstly is a caution to getting into the capability, but a massive adoption once the capability starts reaching a threshold amongst a number of characteristics, not least of which is the value that can be transferred in that sort of set of rails with that sort of service level. Once it's breached a threshold which makes it usable beyond, let's just call it, pocket money, and it starts becoming a real viable use case for, let's call it, general exchange of value in the small business arena or in the person-to-person commerce arena, or even in some cases in the slightly larger business arena, the adoption of that has been remarkable. And I think in parallel to that, the adoption of the use of the framework for real-time, as well as the subsequent requirement from organizations to upgrade their fraud, upgrade their real-time analytics capability, and also just strengthen down the whole payments value chain from originator to recipient to be able to match that. We've seen in some cases markets where the value cap on real-time has gone from a couple of $100 to, in many cases, a couple of $100,000. And that creates a very significant opportunity for businesses to change their value propositions. But on the same time, it also creates quite a significant impact on the financial institutions that are facilitating it, and consequently their level of maturity around managing not just the payment, but the ancillary considerations around fraud and misuse as well. Managing in real time has certainly elevated many of those organizations' maturities quite significantly around real time. That's just one example. I think certainly some other areas where we've seen significant adoption, if we look at the debit and credit card arena, I think it's safe to say that the North American continent is pretty well serviced from a debit and credit card point of view, likewise Australia. And certainly significant adoption there. They're a major player in terms of movement and value, whether it be domestic or international. We're seeing some significant trends inside of that card space, not least of which is quite a significant growth in the debit card space. I think credit cards were by far the predominant use case that was card-centric, but over the last 2.5 years, we've seen a significant growth in debit cards. And in some case, not just the growth in debit card and debit card usage and the business cases associated with that, but we're seeing obviously the rails that they're running on also moving from international rails to domestic-centric rails. Canada's got a beautiful example themselves, but many of the other markets share that characteristic. So if we look at just those two scenarios, it's about creating opportunity because of the, let's call it, service level agreement around the payment arrangement, which is new or enhanced. And that's certainly gone all the way through into the various business models. And likewise, in terms of acceptance of a mean of payments. And I think the key thing around, for example, the North American market is the high level of acceptance of card payments or card-centric payments is a massive enabler. We've seen the contrast to that. We've seen certain geographies which haven't maybe got as embedded card capabilities, and consequently there's been opportunity for other business models, not least which are business models around mobile wallets or intermediaries that actually supplant or replace or layer on top of card models. So very interesting scenarios. And I think what we are observing now, if you look at the card space, we've seen a number of players in the global arena that are moving towards programmable cards. So cards that behave in a programmable API sense for the end user. That's a different realm which we're moving to. And I think that's just an example of what Cody is alluding to in terms of saying as payments capabilities, let's call it broadly, whether they be domestic or international, are made available, the business models that layer on top of them proliferate. Having said that, some of those business models have longevity, some of them maybe less so. But certainly the number of changes happening in the Canadian ecosystem, with not least of which things like ISO 20022, real-time, and a few other considerations, we expect to see a number of business models become significantly more viable in the Canadian ecosystem in the imminent future. So yeah, that would be my quick comment on that, Cody.
Awesome. Thanks, Edwin. Paul, not sure your time in the UK or replatforming Barclaycard or in Australia, add some color to that?
I think add a little bit of color. Maybe use real-time payments as a bit of an example as to how these things change over time. So approximately 15 years ago, around about 2008, the UK put in place faster payments, which was at the time a kind of a flagship system. It wasn't the first real-time payments around the world, but it was one that caught people's imagination and intent and kind of desire, if you like, to sort of follow and start introducing better mechanisms for their own geographies. What's interesting is the design for that started around about 2003, 2004. So at that point in time, if you think back then, there was no such thing as a kind of intelligent mobile phones. The internet was just about taking off. You just about got past the era when telephone banking was innovative. So it's like the different options start to move as you go on. So ISO 20022, for example, that was around when the UK did faster payments. It was a deliberate choice not to use it. It was a huge message size relative to shorter message ISO 8583, and it would take a lot longer to do the messages. So innovations take place over time. Technology moves on, things move on, data moves on. You can start to go a little bit faster. It's also interesting to note that when you have a service like FPS or MPP in Australia, which came in about 5 years ago now, when you look at the difference in those two solutions and what they offer to customers. So if I'm a customer of Faster Payments in the UK, it's still the case that the service level is 2 hours, despite the fact that most payments go through in a few seconds. And the reason it's 2 hours was to allow for things like certain transactions would need fraud checking, certain transactions would need better AML stuff, not sanctions checking because they were domestic traffic. If you move into Australia, then again the desire was for instant transaction, but they also had to sort of look at again they introduced the requirement for sanctions checking on those domestic transactions. So each bank had to decide whether they're going to sanctions check or not. So the level of checking went up as they went through those transactions. And Australia actually took notice of some of the UK stuff. So they actually introduced a separate service. There are actually two different transaction types on over MPP. There's a basic single credit transfer, which is all you need to do to play. That does not have any SLA. In most cases, it will be an instant payment, but there's no service agreement with it. That means that if you are an organization who are, say, a smaller organization, you can't bank 24/7. You can't meet the service agreement 24/7. You can still do a single credit transfer. If you are able to do the instant crediting for most of the time, 24/7, you can do the OSCO. And the OSCO has a service agreement with it, and that service is a proposition to the customer. So you see through those things over time that propositions and services to customers move on. You also see in the background that the regulators go by. So one of the biggest questions we had looking in Australia was what happened to all the fraud in the UK? And the regulators start to look at the fraud side of it. So as you move through time, the range of questions to answer for each new system get bigger. The technical capabilities it's going to meet get bigger. The number of channels and endpoints it can potentially react with get bigger. So that the problem continues to get bigger. And we'll see in one of the later slides, it starts to lead to the ability to differentiate and disintermediate some of those points. Cody?
Yeah, no, thanks, Paul. And I was actually, as you were kind of going through the different capabilities, I was thinking about the next slide that we had on the value chain and the capability model and how it essentially moves from initiation through settlement. But I think before we get to this, and in the spirit of wanting to make this conversational, there is a question that kind of came through to contrast the level of data that's being proposed in the RTR, specifically in the B2B marketplace, compared to EFT or credit. So maybe this one's for you, Edwin, because I think the way I would interpret it is if we could compare and contrast maybe ICO 20022 versus legacy versus 8583 if you're B2B, and sort of what that might mean for that market.
Yeah, I think the Canadian market is certainly, it's in the throes of understanding what ISO means, and likewise what real-time means. Certainly my understanding at this point in time is that real-time from a Canadian point of view in the domestic use case is going to be layered on top of ISO. That by nature means that there's going to be a data-rich interaction, which is going to look quite different from what we currently see in the 8583 world from a card-centric point of view, or likewise 15022 in terms of what you're seeing with existing MT messages. So we expect it to adopt the approach which was different to what Paul alluded to in some of the other geographies, where it is going to be a layering on top of ISO. As much as it's likely to be more data-rich, I think that would potentially provide some friction, because many organizations may not satisfy that immediate data requirement to be able to use it easily. But I know that is something which is likely to change over time. And we're seeing imminent changes in that regard anyway, happening in the Canadian market. But I think at the outset, one can expect it to be a lot more data rich and consequently a lot more valuable for additional use cases which may not be enabled today. So as much as there's a little bit of a barrier to adoption around more data, that same barrier becomes a significant enabler for additional use cases, which because of the data, you can now exploit, which previously you couldn't. So it is a double-edged sword, but I believe the fact that we're heading towards a more aligned ISO 20022 standard inside of Canada, I have to believe it's going to provide some really great opportunities for additional propositions and certainly additional service levels, which maybe we can't accommodate in the world as it stands today. But yeah, great question. Thanks, Chris.
Yeah,
Back to you, Cody.
absolutely. And maybe to add to that with some specific examples that we're seeing in the B2B space, as you said, I mean, more data and structured data, right? And I think some of the use cases that are being explored in the B2B space are things like liquidity and cash management using that standard, are things like automated reconciliation. I think in Australia, and Paul, you'll have to keep me honest, but the ability to send an invoice with the payment, a digital invoice, and e-billing, I think is another excellent example of the B2B space. If we look at Australia, that has really used NPP well, their real-time system.
That service isn't enabled as such yet, but it was designed with that kind of service in mind. So, and that brings, so I mean, I think you asked about the size of the fields. I'm gonna, off the top of my head, I can't totally remember that, but I think you've around about 35 characters on a normal credit card message to put the reference information and details in. And that's not dissimilar to what you get on a usual AFT or DE type transaction or BACS type transaction in the UK. When you move to MPP, you have multiple information fields you can include, and you can use how many iterations you want. Some geographies are .1, some 2, some 3, but these fields are around about, I think they're more like 80 characters long. So you can see with 2 or 3 of those, you get a significant amount of data you go. And there are other considerations as to whether you are allowed to put URLs in that data, which to Cody's point would allow you to have a link to a smart contract or other contract. So you can make a payment and link it to the documentation. So some of these things have not happened yet, but they've certainly been thought about and considered, and there's a way to go before we get there, but they're definitely in there. I mean, the kind of thing we used to talk about on MPP would be you could send a photograph. If you had a night out with some friends, send a payment and put a photograph in the document, in the message. You can't do it at the moment, but there's no reason why in the future you couldn't do things like that.
Awesome. So yeah, hope that answered your question, Chris. And yeah, Edwin, sorry to jump in on the slide. I'll let you get back to the content.
No problem. I think the one key thing that we want to pick up on this particular slide here, and Paul, you can probably speak to it really well, is if you look at sort of an end-to-end value chain around payments, and it's really illustrative, it's not intended to be complete. It's what's playing out in the market at the moment in terms of the business models that these traditionally quite stable value chains have had and what they are changing like in the current state of affairs. But I think, Paul, you're probably best to speak to that right now.
Yeah, I'll have a go at this one. So, as Edwin said, this is not meant to be an exhaustive slide of all the elements that take place in the payments value chain. In fact, if you'd gone back about 15 years, this has more things than you would have seen. But if you go currently, organisations have got far more complex value chains than this. What's interesting, though, is that the value chain is not getting any less. So it tends to get more and it tends to get bigger. You can go in any major financial services organisation around the world and you'll find some value chain a little bit similar to this. They all have slightly different views of it. They all have slightly different views of the way they play it. What's interesting is that so far, generally, it's got a traditional kind of left to right mode. You initiate the payment, you do some kind of capture and manipulation of the information, you do some more processing, then it gets sent through, and there's a lot of regulatory reporting compliance to be done as it goes through. What we're starting to see now is that actually the end-to-end chain traditionally has been owned by major banks. They've owned pretty much the whole of this. Credit card companies are coming on the front end of some aspects of this, but most of the heavy lifting is done by the major banks. They're actually very well positioned to do that and invested well in it. What we're now starting to see those organisations picking apart parts of this value chain. So they either want to sell services to the banks so they'll do their sanctions for them, they'll improve their fraud screening, then they'll link the fraud down the whole value chain. So traditionally you'd have talked about having a front door and a back door as a bank, front door fraud detection and back door fraud detection. What you've got now is scenarios where organisations can actually provide with the transaction from the initiate side data about where that transaction is initiated. So there are technology organisations working with banks in Australia, and I've no doubt over in Canada, and they will tell you roughly where that transaction was initiated, whether it was initiated in a location that a customer would normally initiate that kind of transaction. They can even tell you some views on the keystrokes to do that transaction. So does it look like it's the real person doing it? So I think some of you might have seen some of the dark side of payments stuff the other day. A huge amount of information can now be captured up front to help analyse whether the person using the mobile device to make that payment is actually the owner of that device in the normal sense of the word, in a way that would flag either for fraud, I would say this is okay, you can continue. So innovations are coming in that way. Innovations are coming on the front end with people. Everyone will be familiar with the kind of buy now, pay later. I mean, if you look at the press around the globe, it's getting a very different reaction. So it's largely unregulated because it's not seen as a credit service. Where in point of fact, really, it is a form of credit. If you spent the money on your credit card and paid your credit card off over 3 installments or 4 installments, there'd be no difference between actually having a buy now, pay later and paying the same thing over 3 or 4 installments. But it does it in most instances. It's now a soft credit check, so it's adding a different type of service, a different type of process into there. What it's meeting is the same need: people's desire to pay 2 or 3 small installments rather than one thing at once. And the reaction to it's been quite fascinating. So if you, I don't know how many of you track some of the buy now, pay later organisations. Probably Australia's been at the forefront in these kind of companies, most of which are now substantially less than they were a year ago. I think Afterpay. I think when was it Afterpay? Square bought one of them, but for a lot of money that's probably worth less than half what they paid for it now. So if you look in the marketplace, some of these things are adding brand new innovative services. Some things are adding less innovative services, sort of thing. But the focus is always on trying to make this thing a better experience for the customer, more efficient, more effective. If you look down the track in there, sort of thing, you'll see things like checking for fraud and sanction screening. So if you follow the people like Ripple and R3, you'll see that they're now making international transactions much more quickly, for example, than Swift. One of the ways they do that is by looking at this whole value chain and trying to create a more trusted ecosystem. So actually the actors in the ecosystem are vetted up front. The purposes of what they're doing things are vetted up front. If you lift some of the work from the back end out and you can get some of that agreed and certified and digitally up front, you can actually speed up the whole process. So they're looking at things like that. So there are different ways you can work through this. ISO 20022 is both a benefit and a challenge in this process. So ISO 20022 creates a huge amount more data, but it's actually more structured. The structured side means that you can actually use it properly so you don't get false positives on sanctions check, or as many false positives. The downside is that the narrative and the data that goes with the payment can contain a lot more information. I mentioned earlier the potential to send out either a picture with it or to send a document in a different character set. So it's interesting then you start to see that the challenge that faces the sanctions tools to actually make sure that nothing is being sent that should not be sent over these transactions, that things are being monitored properly. Most payment systems around the world traditionally have been kind of ASCII based. They're now moving to UTF-8. So if you look at MPP in Australia, it handles the whole UTF-8 character set. That creates more technical challenges for people because ASCII is kind of 1 byte, 1 character. UTF-8, you can have up to 8 bytes per character. So your message sizes, the databases you're creating to handle this, all have additional and different challenges. So the whole value chain, in some sense, is getting more complicated. The regulators are getting more involved as well. So we're getting a more complex value chain, more regulation and different points in that value chain. We're kind of moving a little bit from, traditionally you'll have heard people talk about know your customer, KYC. KYC has got regulation around the world. We're now starting to move into what I might call KYB. Know your customer's business. It's not just about I know their behavior. It's not just about who they are. It's about how they behave. If you're watching, if you've been looking at things, I think the makers of Ray-Ban sunglasses are presently suing a big American bank. It won't take you long to look up and find out who. And they're suing them for actually making transactions which were perfectly legitimate transactions, just not in the normal amounts, not in the normal course of business. And they say basically, although these were made by an employer of Elisa who make her own Ray-Ban, they were made legitimately by an employee, but they should have picked up that they were not in the line of not ordinary business, not going to the right kind of places they were going to. So you're actually stepping more into not just know your customer, but know how your customer behaves, know when your customer's at the start of the transaction. Again, that whole value chain starts to get more complex as you move through it. I think if we just move on from that for a second, sort of thing, and go back to Cody and Edwin. I mean, you guys are playing this value chain on a regular basis with the people. Edwin, I think you've been looking at some aspects of monetizing this value chain and things. Maybe you've got some comments on that bit.
Yeah, thanks, Paul. I think maybe just as a quick example of where we've seen business models significantly leverage aspects of the value chain is if you look at cross-border payments as a classic example, the traditional arrangements there have typically been owned by an institution almost end-to-end in partnership with an institution in the other currency zone or geography, depending on how you think about it. What we're observing today is we're observing portions of that value chain, either on the front or the back end, that are being chopped off. So you're finding that the customer interaction or the business interaction portion of the value chain is being separated from the traditional financial institution. And there's a number of reasons for that, some of which is if you've got a significant enough network in that geography, you can effectively do a lot of netting and only do the gross settlements on the traditional rails. So certainly we're seeing a plethora of business models in just that particular use case, which are doing everything from I own everything end to end through to I own very little, and I partner with players who are either existing partners in the traditional paradigm or partners who are running in parallel to the traditional paradigm, maybe on some of these other rails or arrangements, which are either incumbents, up and coming, or in some cases highly speculative. So we're seeing a significant amount of the business propositions in the traditional payments chain being tested. And often what's happening is there's a portion of that business value proposition that's being identified as being possibly wasteful or can be optimized on, or some other use case where they can build additional revenue streams into it. And then you're finding organizations that are focusing very tightly on those areas. But it's not, I'll do everything. I think it's safe to say that from an ecosystem play point of view, there are very few players that have the appetite or the muscle to go out there and try and own everything end to end. We're starting to see a far more agile partnership type model where players are saying, I still need to deliver this proposition to my clients. This is what I believe I'm good at. Who's an equivalent partner who can help me satisfy the balance of the value chain? So just to use those as two examples, those are places where we are certainly seeing a lot of that partnership and ecosystem type philosophy. But I know, Cody, you've got some other concepts as well.
I was actually going to bring up the correspondent banking example because that one was top of mind for me as well when it comes to cross-border payments and institutions recognizing that the role when it comes to cross-border payments, maybe like you said, Edwin, the traditional institutions is in clearing and settlement, because I mean there's not too many ways around that if you don't if you don't consider the maybe distributed ledger technologies, right? So however they may originate in the front end, a lot of those offerings still need financial institutions and the SWIFT network in the back end to go cross-border, right? But then what we're seeing is if we take that value chain and kind of break it down a little bit, where the points of differentiation are and where the competition is in the front end to capture those customers, very much a network effect to get them onto your platform. And then it quickly switches over to, once the payment has been initiated, how cost effectively can I do it as it moves through the rest of the value chain to the other end, right? And so, yeah, I would say the reason why the boxes on the screen are colored a little bit differently is to highlight some of those areas where there's really competition from an innovation perspective, from a differentiation perspective, and others that are really driving towards zero margin. And yeah, it's about how quickly and efficiently can I do this to get the payment from A to B.
I think just to finish on this slide, David's put a question in the join the conversation part around which of several properties listed is most important and should you focus on for strategic. I think the answer, David, is basically it depends what business you're in. So none of those properties are not important, and people who operate in payments and run payments will tell you for the large part of the time nobody notices, nobody cares. The transaction gets done. It's got to be easy, convenient, usable. It needs to be uniform. It's nice experience. Nobody cares as long as it happens. When you get noise is when your payment doesn't work, or a system goes down, or something doesn't work. That's when you get a huge amount of noise. So in terms of the kinds of things you've got, like portability, divisibility, uniformity, limited supply, acceptability, you need uniformity. So most infrastructures, when new infrastructures go in, one of the key challenges to the participants who want to send transactions over is you must be able to receive. You don't have to be able to send, but you must be able to receive as a major recipient of transactions, because if you can receive, you're open for other people to use them. You don't restrict other people using them. If you can't receive, you get a much more fragmented marketplace. So things like that apply at the kind of regulatory level. And then you get into the sort of the transactions per second sort of thing in real time rather than batch. TPS for real time should not really be an issue these days. Technology has moved on far enough that you should be able to handle that. What makes it interesting is some of the things whether you can completely sanction screen in real time. Hence my view about whether you need to bring some of those things up front and change their position in the value chain. At least enable that and create what you might call a trusted ecosystem. If you create a trusted ecosystem where parties in that ecosystem, and this is where you get into related topics like digital identity or open banking thing, then you can actually start to move things much more quickly. But that might be specialized or standardized around particular industries. So ISO 20022 for retail is very interesting, very good, and there's lots of good stuff you can do with it. It's real game-breaking type options are probably around commercial applications, around being able to actually initiate payment or payment requests from one organization where you can actually include all your details and invoice information such that when you get the payment back against that, you can reconcile properly and automatically. It's still one of the biggest problems that commercial organizations around the world have to deal with is actually managing reconciliation. So that probably concludes on this slide sort of thing. I think we're moving on to the last part for Edwin sort of thing, but hopefully that gives you some flavor, David.
Thanks, Paul, and great question. Thanks, David. I think we've touched on a number of things, and some of them sound really quite exciting because they're new and they provide additional opportunities. I guess this slide is intended to just give us a little bit of a reflection and say, yeah, as much as, and the bottom left-hand side of the slide gives you an indication of what a checkout looks like in a retail institution. Confusing to say the least. So there's a plethora of opportunities that in this use case you can use to make a payment for something that might be a relatively simple purchase. So that indicates, I believe, the state of payments in many ecosystems where payments is rife. There are many use cases, many participants, many players, many ideas. Having said that, some of them will survive and some of them won't. I suppose the reality check we need to do is also just have a look at how does payments happen today and what are the trends looking like. As much as there's a lot of payment arrangements or payment opportunities that make the news and the headlines, we also need to do a little bit of a challenge in terms of saying, well, what's actually happening in the numbers? So with regards to the data, how are payments being executed on today? And certainly most payments today are still happening in very traditional forms. However, having said that, some of them are on the wane and some of them on the rise. I think it's safe to say that the physical currency, namely cash, is something that you're seeing a significant reduction in usage of. Things like, for example, COVID-19 has certainly helped drive that cash reduction model very, very aggressively. In certain countries, cash is barely usable, not because it's not a good instrument, but just it's no longer an acceptable instrument given the circumstances. So one of the things we would definitely continue to see is a significant reduction in cash as a mechanism of value exchange. We also need to recognize that the card players are very significant and continue to remain significant. The difference being is what I alluded to earlier, where we're seeing a little bit of a change in position around debit and credit, with debit cards starting to push a little bit more weight, shall we say. And that makes for very interesting use cases. The questions are why, and that's a long topic on its own. But needless to say, the debit card dominance in certain countries, or looks like might be dominant imminently, is something that needs to be paid attention to. And likewise, other things, electronic funds transfer certainly doesn't get much airtime, but accounts for a significant amount of value transfer. You know, the stuff that does get airtime in many cases is either quite new in the market or relatively low in terms of volume or value, or the trend in terms of its adoption might be looking pretty good. There's a fair amount of conversations, and many organizations we engage with are very passionate about prepaid cards. Prepaid cards provide a number of opportunities for organizations, but I think it needs to be said that the prepaid card ecosystem, although relatively large from number of participants, only a real small number of those participants get any kind of traction. And if you've got to think about where we're going to in a world where not only cards, but electronic or wallets or some other form of either open, partly open, or closed loop currencies are being considered in many institutional use cases, do you really want to go up against the sort of 300-pound gorilla in the room as a new entrant into the prepaid card arena, maybe you want to think about that. Maybe it's more a case of how do you partner, because trying to repeat what's already in existence, you've got to have some clear understanding of what your value proposition is really about. So I think that the message we're trying to get across is, as much as there's a lot of change in the payments ecosystem, and even some of these incumbent significant mechanisms of exchanging value are being affected in many ways, the vast majority of value is still being moved on quite traditional arrangements or rails or through traditional instruments. Having said that, I think it would be naive to say, well, don't pay attention to anything new. I think there's a beautiful example of things that are happening under our feet right now that we need to pay attention to. Let's just look at the cross-border use cases on non-traditional currencies, so cryptocurrencies or stable coins particularly. Anybody who's paying attention to what's happening there would recognize that that's really quite interesting. Now, whether it would be regulatory acceptable or whether it has many of the other characteristics that are desirable or not is open for, I think, much discussion and decision. But something that has increased in usage by 20-fold in 18 months is certainly worthwhile giving a little bit of investigation. And I believe many aspects of the payments ecosystem are showing those kinds of trends today. I think Paul alluded to the buy now, pay later. It was a massively exciting invention, in inverted commas. There seems to be a bit of a cooling off, and maybe it's appropriate given that it is an instrument or a mechanism of conducting commerce which has a credit aspect to it, which maybe was a free ride for a while. I believe there's an appropriateness of looking at all of the new incumbents in the market as well as the new arrangements, and to measure them against not only are they viable business cases, but how do they support the ecosystem. And I think that's the key aspect. It's an ecosystem. It's a collection of things. So one or two things, and I'd like to end off with asking Paul and Cody just to give a quick sense on some of the things that they've observed. And certainly, Cody, I know you've observed a couple of things when we've had conversations around, can we go completely modern in our payments ecosystem and get rid of cash, for example? A very powerful question, but an equally interesting answer. So Cody, if you could maybe speak to that.
Yeah, absolutely. And this is something that we were working with one of our municipal clients on, and love when they take the initiative and recognize that. But what we found throughout that analysis is especially the stickiness to, cash and non-cash payments was from a maturity perspective of their capabilities. They were a little bit immature on the digital capability side to really push for digital and contactless payments, but they were also, I would say, overly mature on the cash and paper-based instruments, in the sense that they were at one time very, very good at processing cash and checks and coins, a capability that I would say is in some institutions not appropriately scaled back as cash declines, as we're seeing on the chart, right? And so what that meant was their infrastructure was built out too much for the volumes that they were currently seeing, and with in decline, not expecting to go that way. There's a real opportunity to rationalize some of those assets, and we really worked with them on what we had referred to as minimum cash infrastructure, to say, okay, well, cash is declining. Where should you be from a maturity capability the other way? So not necessarily where you need to step up because where the future of payments is going, but maybe where the payments are headed. And the reason why it becomes a little bit interesting for public sector organizations to go cashless is there's a bit of a social contract there with people, that there's an expectation to accept cash. You have unbanked, underbanked citizens, and a little bit different than maybe a purely corporate mindset. But yeah, that was some of the observations that we had on the maturity spectrum. How, I mean, it's an interesting conversation to have with a client when you tell them you're too mature from a capability perspective.
Yeah. Paul, I see David's got a really good question. I'm going to ask if you can field that. He's asking the question, if we could pick on one, which would be, I'm not sure this is binary, but if we can end off with that.
Well, I'll actually try and answer Sid's question as well, because since Sid's up there and backs traffic and that. So original real-time systems were not designed and not built to take on all the kind of BACS traffic type equivalent. BACS is the UK bulk payments, for those that don't know. Whereas if you look at Australia, MPP has been designed that ultimately it could take the volume of the DE traffic, which is the BACS equivalent. So I don't think it's there yet, but I think people planning newer real-time systems are now planning those systems with a view to having the option to move off their batch traffic and put it all over a real-time system eventually, which means real-time systems will take files. So there's a whole different discussion on that. Sid, if you want to send me a note, I can take you all through aspects of how you put files into real-time, which sounds like a tautology. And the last bit, David, that's a bit cheap. Can you pick just one of those? Well, there's some huge topics in there, sort of thing. I think I'd probably go for the one that's not in there for me, just to be awkward, which is probably ISO 20022 and standardization to allow commercial improvements on commercial traffic. And that would really open up a lot of good things. Anybody else got a different view?
No, I think you're great. Thank you.
Yeah, I think we're out of time for the session. So I thank you for everyone that kind of joined us today. I believe that there's some contact details below the session. And so absolutely feel free to reach out to us or the KPMG team anytime to continue this conversation or to talk about really anything payment related. We could absolutely keep going.
Thank you and
Thanks,
goodbye.
Yeah, thanks everyone.